If you don't have the resources, you have to become resourceful. Let's say you are somebody out there who don't really have that capital. Let's say you're not a high income earner. You have to go out there and find the capital through relationships, through networking, through whatever means possible, through, let's say, your friends and family. Pull that money together in order to start doing that.
Welcome to the Real Freedom Show, where we inspire you to pursue your passion to gain time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. Let's get some real freedom together. Hello, everybody. Welcome to Real Freedom, where we talk about different ways that people are building time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. If you want to get started on your investment journey, check out our website, freedomthroughrealestate.com. We've got lots of great content on there for you. Interviews, our podcasts, blogs, really to help you guys decide kind of where you want to pursue in real estate, what your path is going to look like. And hopefully through this podcast, you can be inspired by others. And so today, super excited. We've got Truong on, pharmacist turned investor, right? You know, we talk about how many people want to be in the medical field, want to be in pharmacy, that kind of stuff. And then what I find on my podcast is I have a lot of people on that get out of that and go to real estate because they like the freedom of that. So host of the Wonton Wealth Podcast, founder of Proton Capital, also author of the book Value Over Volume, the Foundation of Commercial Real Estate Investing. Excited to have you on.
Mike, pleasure to be here. Super excited to talk to your audience today. Let's just fire it off with some great value.
Well, give us a little bit of the background. Why did you want to get into real estate? Kind of how did that start? And then we'll take it from there.
Yeah, Mike, like you mentioned, I actually started my career as a pharmacist, or if you like to call it, a licensed drug dealer. I did that. I went to school for roughly 6 years. It was a 6-year program here in Cincinnati. And right after that, I started my practice after getting licensed. And throughout that little, through school and as well as during practice, I was learning everything that I could about investments being stock market, anything like trading. I didn't really do any trading. It was more so being a Buffett disciple of learning how to value invest or buying undervalued stocks. And that naturally brought me to real estate. I went down a rabbit hole of going through podcasts, just financial freedom, things like that. And I mean, I don't think at the time, Mike, you had your podcast out, so had to do a lot of searching. No worries. Had to do a lot of searching and learned a lot about real estate. So I started my career in real estate as soon as I was practicing as a pharmacist. So I was kind of doing a side hustle with my main career. So bought my first duplex in 2017. The second one followed very shortly after. And then from there, I did a little bit of wholesaling, flipping, burrs, some holds. Naturally, I'm a buy and hold investor. Didn't really do much with notes and anything like that, but your traditional investments within the real estate asset class. And from there, I found this thing called residential assisted living. And what that is it's essentially a nursing home, but not so much comprehensive. So in a nursing home, you're going to have a nurse pretty much 24/7 taking care of you for whatever ailments, disease, conditions that you have. In an assisted living, you can do a couple things on your own. However, you need some assistance with activities of daily living. So that really intrigued me because it tied the healthcare, the business aspect, and the real estate all together. And I was like, this is the perfect piece for me. And so we were trying to develop an assisted living facility here local to us in Cincinnati, Ohio. Got drawings, got architect plans, raised the money, well, the majority of the money, I would say. But then COVID hit, so we kind of had to stop that piece. And from there, we were just kind of in hiatus, not knowing what to do. And at that point, my partners and I had two other partners who were also in pharmacy school with me at the time. We disbanded, sold all of our residential portfolios, and essentially split ways. From there, I went to look at commercial because commercial was one of those asset classes that I knew nothing about. And I was searching online, YouTube University, again, hoarding books, resources that I could find, but the information was very limited, very rudimentary. So I still didn't have enough information in order to do it myself. So I went out and found a mentor locally and essentially got in front of him. He taught me everything he knows, and today he's my business partner. So my first investment in the commercial space was 2021 until now. So I've been in for roughly 4 years or so. I've taken two deals full cycle. Have I can't remember how many square feet that we currently have because we sold some. I'd say maybe anywhere from 300 to 500,000 square feet across a handful of roofs. Those asset classes are retail, warehouse, office, med office, anything non-residential without a tenant living in it. Hope that covers a little bit long-winded there, but hopefully it covers a little bit of the background for you.
So kind of opposite me there, because we're just apartments inside of the commercial space. So would love to hear kind of just to backtrack a little bit, talking about getting started, because I know there's a lot of people that maybe haven't done a property yet, looking to get started. And you rattled off, I mean, between, small multifamily, wholesale, flips, burrs, that kind of stuff. You did a lot early on. So talk about risk taking. I know a lot of people are curious to know about kind of financing and maybe, you can talk about how you did that, but especially just those early days, being able to be okay with taking a risk and, an educated risk, because I know that's what holds a lot of people up. So I'd love to hear just more about your kind of your feelings and your thought process going through those first couple of steps.
Yeah, so I actually stepped away from my pharmacy career December 31st of 2020. So that was my last day ever working as a pharmacist. But in Cincinnati, a pharmacist's income is pretty modest. You're making pretty good money out here, and it's very sustainable. That, in addition to me, so I take care of four people in my family, and but the expenses that I have are relatively low, like call it $2,000 to $3,000 per month, right? So at that time, with that income, I could save the remainder of my income and I could either invest it in stocks, or what I did was I saved it for investments in real estate. And those were, small multifamilies or single family properties. Again, when I was doing the wholesaling, the burrs, flips, holds, and whatnot, that was only a period of probably 16, maybe 18 months. And in that time, we did probably $3-4 million in volume and had and acquired roughly 14 doors or so as a buy and hold. So I would say for me, when I started, I was already pretty disciplined with saving my capital. So it was easier for me to purchase an investment property, being a modest income earner and being able to save so much capital aside. Now, what I will also say is that I've also had a partner. So now you have two people who are modest or higher income earners with the ability to save, to put down that capital liquid in order to get started. And when you get started, from there, it kind of snowballs. So the income that you can get from your first rental, that in addition to what you're saving, can start to accumulate and the snowball starts to grow. That leads you to the next property and everything thereafter. So to answer your question about risk, well, your first question was how did I get started? And it pretty much came from savings and partnerships. However, there are other ways to do that. If you don't have the capital yourself, again, well, my saying here is that if you don't have the resources, you have to become resourceful. Let's say you are somebody out there who don't really have that capital. Let's say you're not a high income earner. You have to go out there and find the capital through relationships, through networking, through whatever means possible, through, let's say, your friends and family. Pull that money together in order to start doing that. Now, The second question, Mike, was the risk piece. How do I manage the risk? Well, at that time, again, I was a hoarder of knowledge. So I read every single book that I could get my hands on. And let's say only 60% of it or 70% of it was actually absorbed. That made me pretty dangerous. So I knew 70% of the material, right? And the caveat here is that I will say that any book that you read out there is not going to teach you everything you're going to know. You're going to have to put in some hands-on experience in order to learn everything more. Because I thought I knew a lot, but the first year as a self-manager in my own rental portfolio was very eye-opening. It taught me a lot that year, or even first couple of months. But again, the risk, I managed the risk by educating myself, knowing as much as I could, utilizing the network that I had around me for answers. I had friends that were in the contracting business. I had friends in HVAC, so I could call on those people to help me through whatever issues that I was going through. So it's risk comes from inexperience, and it comes from not having enough knowledge. So if you can fill those two gaps, you should be okay. You should be in a really good position to be, again, dangerous. The other piece I would say is that I was still working as a W-2 pharmacist. So I still had an income. If shit went south, I would still stay afloat. Some people don't have that. Some people will put their back against the wall and jump forward. So you have to, again, alleviate what you don't know. And that's what I did in the commercial side. I put my back against the wall, and so that was a little bit more risky for me. Hopefully that answers your question, Mike.
No, absolutely. Because one of the things that I highlight with people is just the importance of getting started and trying to manufacture a win or manufacture your first deal, right? Like you've got to find a way to get in. I think that's where people get stuck. It's like, well, I don't know how I'm going to get the money. I don't know what asset class I'm going to choose. And it's like, you just got to get in and learn, because once you get in, then you realize either I like that asset class, I don't like that asset class. But to your point, you said you learn more in the first year of actually doing it than all the time listening to the podcasts and all that. And so, my advice for people is always find a way to get in and get started. And then once you get in there, then you can adjust.
You also want to figure out what method or vehicle fits you the best, right? So there's a million ways out there to make $1 million. So you just have to figure out what actually fits your mold. Could it be stocks? Could it be trading? Could it be arbitrage? Could it be short-term rentals, or just single families, multifamily, or commercial? All of them are real estate, yes, but they each have a different caveat to them. So you have to figure out what fits you the most, and then you take that vehicle and run with it.
I had a client that bought a small multifamily property, and after having it for a while, they just were totally stressing themselves out because they're thinking about their property and the tenants and what are the tenants doing and are they, ruining it and that sort of thing. And they just couldn't deal with the kind of the uncertainty of that, of feeling like it's a little out of your control. And then they just decided they were going to sell and go back to stock market because it's different, right? And so I think, to your point, some people diversify, some people have risk tolerance, and some people want to be hands off, some people want to be hands on. It's a mix, but you learn by doing. So, are you looking to get started or scale in real estate investing but don't know your next step? Are you overwhelmed thinking about finding deals, analyzing deals, doing due diligence, and managing properties on top of it? Go ahead and push the easy button and invest with us. Real estate investing is what we do full time. We've done dozens of deals with hundreds of doors. We have the knowledge and experience to handpick the best deals that most investors can't find. We've got large off-market deals all the time where you can hopefully find returns and economies of scale that you just can't find on your own. The best thing is it's 100% passive to you for less capital than you put down trying to acquire a property on your own. Don't let this year go by where you don't make the leap, add to your portfolio, or you just sit in analysis by paralysis. To find out more, visit freedomthroughrealestate.com and click on invest. You can book a call and learn more there. So get to scaling your portfolio now with us by your side. Yeah, so talk a little bit about, because you mentioned about, having some partners early on, selling it, and then now having a new partner. Would love to hear just your thoughts on finding partners, balancing workloads, or, kind of figuring out who does what, and then, tips or advice on that piece.
Yeah, so partner, this is a difficult one for a lot of people. So I am a firm believer that I cannot do everything myself. So I have to delegate some things, right? Whether it be through employees or somebody on the team, right? Partners should help you exponentially grow. And the biggest piece here is that it's a marriage. You have to look at it as a marriage. Even I've had millions, 20, $30 million in handshakes before. Those are the people that I can trust, right? I don't need anything on paper. I don't advise that. Even though nothing's gone wrong, I would have everything on paper because circumstances change. Who they are now, what they're going through now is going to be different. Or the same thing with you. What you're going through now in your circumstance now, it's going to change a year from now, 5 years from now. So you have to always plan for the worst, or you have to plan for an exit in some way, shape, or form with your partners. Now, how to find your partners, I would say partners might not be for everybody. Some people are controlling, some people want to do things their own selves. So you kind of have to look in the mirror, do a self-assessment to see if having a partner is something that would truly benefit you. Again, from my position, I think partners help you get to where you want to go and your goals a lot quicker if you choose the right one. Now, who's the right one? I think the perfect partner is someone who can complement what you lack. So if you're a visionary, you're going to need an integrator. Or if you're an integrator, you need a visionary. Let's say you're super organized, you're an operations type person. You'll need somebody who's more like a visionary, who thinks a little bit bigger, who focuses on growing. Whereas you are somebody who's inundated with kind of the day-to-day stuff, or I shouldn't say inundated, but you love doing the day-to-day stuff and you love seeing progress within every week or the goals that you're setting for your team, things like that. Or just from a personality perspective, if let's say I'm really good at networking and my partner's more so better on the operation side, that would work pretty well, right? So again, you want to find a partner who is complementary to the skills that you lack. And again, you want to plan for an exit. You want to plan with the end in mind, whether it be a short-term partnership or a long-term partnership. Um, my first set of partners, we didn't really see eye to eye on a lot of things, and that's why we disbanded. Now I found a partner in the commercial realm who's been my mentor for the past 5, 6 years. And same partner that I've had handshakes on for multi-million-dollar deals, and we vibe very well. And I don't see it as a short-term partnership. I see that as a more of a long-term partnership. So again, it kind of depends on what your character is and what you are looking for when it comes to a partnership.
So talking about your sweet spot, your bread and butter right now. So you linked up with a new partner, decided to get into more of, retail, warehouse, office. Is that all in the Cincinnati area? And then talk about your criteria of what you're looking for opportunities.
So they're not all in the Cincinnati area. They would be considered probably around the Midwest and the Southeast. I typically avoid the coastal states, West Coast, East Coast, they tend to be a little bit more expensive, and I don't have a competitive edge out there. The numbers just don't make sense to me to find opportunities. For me, I guess anything with outside of the coastal states is where I look, but I focus primarily on the Midwest. And I love retail, love industrial, and office space right now holds a big opportunity coming off of the COVID season. Um, so I think my favorite asset class would probably be either flex space and strip malls. Those are my bread and butter, I'd say. But since office is presenting an opportunity, my focus is transitioned over to office. So what I look for, I am a value add investor. I don't buy your credit tenant properties that are generating 4, 5, 6%. I look for deals that have a lot of potential to add some type of value so that you can exploit the cap rate and pretty much benefit from the backside. So call it's pretty representative of flipping in the residential side. So, when you're flipping on the residential side, you're buying a house that's dilapidated, whatever. You're fixing it up. You either rent it out after that, but ultimately you are selling that asset after your improvements, right? So let's say you bought a house for 50 grand, put in 30 grand into it, it's worth 150 grand. So you make the net difference, right? After, we're not going to talk about the fees and all that, but you're going to make some profit at the end. So it's essentially the same thing for me in the commercial realm. However, there's a lot more nuances involved. It's not just fixing up the property itself. Sometimes it comes from the operations of the property. Sometimes it comes from re-engineering the leases. Find lease ups, changing the type of leases. You can create outlots to sell, and that adds value to the property. And essentially, I'll hold the property for 3 to 5 years. The last one I took full cycle, it was a $5 million purchase. We created an outlot, optimized some of the operations, increased rents for some tenants, found better tenants in some of the places, and once it was fully occupied, sold it for just south of 8 million over 3.5 years. So value add once again. And I think the other criteria for me is that the property has to cash flow from day one with current debt terms, which means I typically look for something that's around maybe 10 to 15% cash on day one. And if it's not there, it has to have a bigger valuation on the backside, on the back end. So 10 to 15% day one with the value add. Hopefully it gets to, your mid 20s. And if it goes over 30, fantastic. But then I know that the value of the property is going to be considerably more once all that stabilization and value add has been completed.
Talk a little bit about working in markets, outside of Cincinnati, in different states, different cultures, different climates, trying to learn about those opportunities, trying to recognize that it's different when it's, hey, I've been driving by this strip mall down the street and I see there's a ton of value here. It's different when it's a different state, an area you're not familiar with. So how do you feel comfortable or kind of eliminate those, I guess, kind of that second guessing or educating yourself to feel comfortable about a market that you're going to take down a property in?
Yeah, so it's very similar to your own backyard, right? The only difference is that you're familiar with your backyard. So you don't have to do any more research on your backyard. You've been there for a while, you know it, etc. So any market that we look at, any property that's outside of Cincinnati, we'll look at the demographics. What does the population look like? What's their income? What's the household? What's the combined household income? What's the median house value? What's driving that particular market? Who are the employers, right? Where does the property sit? Can it draw tenants? So each asset class is going to have its different nuances. So retail, office, and industrial, all different nuances there, right? So when you're looking at a property, just based on, again, within the real estate side, the one thing you can't change is location. So you really have to know that location, and that comes from research. And it just, a lot of it comes from intuition, right? The data is going to give you some intuition. Now, if the household income, let's say, is 40 grand, I know it's not an affluent area, right? If it's 140 grand, now I know they have some expendable income. And retail should probably survive, right? And let's say there's a lot of demand for industrial spaces in the area, then I know an industrial property would probably survive. So supply and demand metrics as well. And, outside of intuition, you kind of have to utilize the people that are around you. try to find as much data as you can, right? Call some brokers up that are in the area. If you have friends that are in the area, boots on the ground, call them, get their intake. And that's how you get to know the feel of the area. If a broker is going to tell you, I have space, I have retail space in this area that's been sitting for 12 months, 14 months, I can't get it leased out, that tells you there's a problem, right?
Mm-hmm.
So we generally manage all of our property ourselves with a caveat. So it depends on what stage of life the property is in. Is it really dilapidated? Does it need a lot more hands-on? Or is it one of those that's plug and play where you can just lease up to a couple tenants and just kind of ride the wave, manage it remotely, call contractors, etc. But in order to be comfortable investing outside of state or outside of your backyard, you have to know all the data about that particular location. If there's, again, market drivers, supply and demand, get all the info that you can, and then on top of that, you also have to put a team in place if you want to invest out of state. Now, with commercial, it's a little bit easier if you have properties that are a little bit more, let's say it has a little bit less value add, to where you can just lease it up and kind of plug and play with it. You have your contractors in place where you can manage everything remotely. That is on the easier side. Now, if a property has a lot of issues with it, tenant turnovers, late payments, things like that, and it needs a lot of work in and of itself, you might want to hire a property manager for something like that. That's where your team comes into place. Again, you become a lot more confident in something once you have all the knowledge base and the team around you in order to do something about it.
Talk a little bit quick here before we wrap up about building deal flow. Because you're working in other states, you're working in other communities, building relationships with, brokers or whatever it might be. Would love to hear kind of how you're building up that network so that you have consistent deal flow to try to find those right properties to weed through.
Yeah, so just like in residential, you have off-market and on-market properties, right? Off-market's a little bit more challenging to find because the data within the commercial realm is a little bit more challenging to dissect. And that sometimes comes from the data provider, but ultimately it comes from the county websites, right? So the data is not very clean compared to residential. So that's one way to find deals through data, whether you're cold calling, doing direct mail, etc. So you can do it that way. But again, the data is a little tricky. On-market deals, you can find those pretty much on Crexi, LoopNet. They're there for you to see, right? So the problem with that is that there's a lot of eyes on it already. So it depends on if you're pretty religious on looking at Crexi and LoopNet all day, every day, you might be able to find a deal. There are deals out there on Crexi and LoopNet. You just kind of have to craft it a little bit. Now, sometimes residential brokers come into finding some commercial deals. So that comes from networking through local meetups or, meetups that are, let's say, out of state, what have you, or just communicating online, right? Outside of that, you can look on Facebook Marketplace, you can look on Craigslist. I think Craigslist is still a thing, and I'm sure you can find something there. So those are all ways that we have found deals or are looking for deals. In order to find additional deals, you can look for broker websites that are poorly marketed, and a lot of times, one of our first deals that we found, a broker only had it listed on their website versus Crexi and LoopNet. So you would have to do some digging in order to actually find that deal because it wasn't mass marketed. To answer your question, Mike, how do we build that lead flow? So it comes down to utilizing a lot of these different methods in order to build that pipeline. So we have people that cold calls for us. We're doing a little bit of direct mail. We are looking religiously on Crexi, LoopNet, Facebook Marketplace sometimes within our area, and that builds up a little bit of a lead flow in and of itself. Now, broker relationships is a really big one because they have probably the most data and they're doing all of this outreach already. So we keep a database of the of the brokers that we talk to, we curate that list and we try to continuously reach out to them whenever we can. And, you know, outside of that, you also have to build up a brand for yourself or a reputation for yourself within the space. I say that because you don't want to be a tire kicker. You don't want to be somebody who's out there like, hey man, just send me all your deals. I don't care what it is. As long as it's value add, send me your deals. Well, first off, that's not as it's your criteria is dog shit. It's not there's nothing behind that. Like how do you define value add, right? You have to get more specific with it for one. And for two, if you want the entire list, like you're just going to look through this list and pretty much tell the broker that you don't want any of it because you yourself don't even know what you want, right?
Mm-hmm.
So you have to really, really respect the broker's time to build that relationship with them and also letting them know that you're not a tire kicker. So that's how you build up relationships, and hopefully those brokers think of you first when they find deals, whether it be on market or off market.
So talk about your book here, Value Over Volume. What was that process for you? Kind of what was that stirring that you had that made you decide that you wanted to write a book?
Oh man, honestly, I've told people this. I would say I would never wish to my worst enemy that they should write a book. Like it's probably one of the most rigorous things I've ever done, and that speaks a lot of volumes because I went through grad school to get a doctorate, right? The idea behind it is that I was thinking, you know, I'm learning all of these things, and I was in the position where I didn't know any of these things. What if I could help the next person down the road so that they don't have to spend all the time that I did and all the education through finding a mentor, you know, going through that process? What if I could save them a little bit of time? What if I can add some value to them that way? What would happen, right? So then I was like, you know what? Screw it. I'm just gonna do it. I'm just gonna write the book and I'm just gonna throw it out there. And if it helps, it helps. If not, well, it sucks. So I sat down for probably, it took me roughly a year to write everything. And by everything, I mean, so this is the Value Over Volume, the foundation of commercial real estate. That's like the first set of three. So I wrote it. I probably 40 to 50 hours a week. I just was either writing, cleaning things up, you know, adding stuff, all that. Did that for roughly 12 months, and then finally got to the editing stage, and that probably took me 3 to 4 months or so, just to edit it, you know, day by day, and then maybe another month or two for like graphics and getting the design ready, right? So I wrote everything and I looked down and I was like, wow, this is a lot of shit in here. They're like if you look at a 6x9 book, you know, my first book, the Value Over Volume book, was roughly 300 and something pages. I have probably another 600-700 pages that I have to go through, edit, and kind of go through that same process, right?
Mm-hmm.
So at first my thought was I can't publish this entire thing. If I did this entire thing, it'd be a 900-page book. Who the hell is going to read 900 pages, right? And from a pricing standpoint, through Amazon, it didn't really make any sense, right? So that's why I decided to break it up in three. The first one is more so the basic stuff, getting you hip to the language, the lingo within commercial real estate, hopefully building a foundation for the audience to understand going forward. So, you know, if you have your baseline, if you have your foundation, everything after that you can kind of build on yourself. Similar to a real estate building or a house. You got to build your foundation first, and then you got to layer the brick vinyl roof, right?
Mm-hmm.
The second book, I was in the process of editing it, and then I had this stupid ass idea of actually turning it into a parable or a fable. So I'm pretty much back at square one right now, trying to go through that, chipping at it day by day. And then the third section of it is going to be more so on the mastery level. It will probably address like creative financing, ways to structure deals, way to structure partnerships, syndications, you know, the higher level stuff after you've gone through the foundation, knowing how to invest in the commercial real estate.
It's quite a process, and good to know we've got the first set of the trilogy here that's coming out. So thank you so much for your time. Thanks for sharing your story and your experience. For people that want to reach out to you, how can they do that?
Yeah, pleasure being on here, Mike. It was awesome. Thank you so much for inviting me. I am pretty active on Instagram. My handle is pro_Tanh. That's PRO_TANH. Again, like Mike mentioned, I have a book called Value Over Volume, The Foundation of Commercial Real Estate. You can find me on LinkedIn. That's just first and last name, Tanh Truong. Outside of that, I have a website called Proton Profits. You can find a little bit more information there. And yeah, that's pretty much it.
Awesome. Well, thank you so much for coming on and sharing, and best of luck to you guys as you continue to grow.